traders, it's Mark here from the day trading room. Time's approaching 10:30 in the evening London time. It's one day before the last day of the month, last day of the quarter. So a lot of interesting action going on. A couple of things I want to talk about today in the video. First one being breakouts, trading breakouts. And then I'm going to talk a little bit about mistakes at the open. And then finally, I want to discuss what the best trade that's working very, very well at the moment, the best setup that's working well at the moment, for me anyway. So let's talk about these breakout trades first. Now breakouts, I think they're the easy trade in inverted commas. They're the easy trade, and they very rarely work as well as you'd like them to work. They're easy because as the market approaches the low or the high, the easiest thing to do is to sell for the break or to buy for the break of the high. And the easy trade very, very rarely works, which is why I very rarely trade breakouts in that manner. Now, I'm not saying that you can't build a strategy around them. You can, under certain conditions. I will trade a breakout, let's say data, surprise news, or if I've really got a good read on the tape and it's really pressuring day, a lot of pressure, then I may well trade it. But very rarely do I trade it that way. How I prefer to trade them is this, and I'm going to run through this today as an example, and actually as a reminder to myself to this is a great example. This is why you do what you do to trading breakouts. Friday's low here on the YM also coincided with the 11,000 cash on the cash chart. So my premise was, I actually came back quite late in the afternoon to the screens around just after 7 o'clock level. So I'd missed a lot of this action here. All the screens just gone. I missed a lot of this action here. But anyway, as I came back, the market was pushing lower. Not getting involved until I've got a feel for the tape, feel for the action, feel for the pulse. So didn't get involved in this pullback here. However, I had a thought, a feeling, an idea that perhaps today we would probe under the prior day's low, under that 11,000 cash, and do some sort of flush. And so I wanted to position myself for that trade. But what I didn't want to do is start selling here and looking for that trade there as it flushes through. That's not what I want to do. The way to trade that, the way I trade that, the way that I will position myself for all these type of trades, if I believe that the market is going to break a level, is to get in on the trade early. Now in this instance, this is what happened. In actual fact, as I say, this is a great example of why this is I believe the best way of trading breakouts. We pulled back up here, and I took the short here on the tick pullback. The tick pullback, I've talked about that before. Classical setup for me. Great little play. Pushing up here, scaling as we go down, the tens, and then more off as the market pulses in my direction. Looking final target for a flush under that 11,000. Nice flush, nice big volume, nice low tick reading. That's what I'm looking for. That's going to be my final target, final exit. That's the premise of the trade. But because I'm scaling as the trade goes in my direction, let's zoom in a little bit more on that so we can see a bit clearer. So here we are here. Because I'm scaling as the market moves in my direction, my actual final premise doesn't need to happen for me to make money from the trade. And this has happened 3 times for me. Taking pullbacks, waiting for little unwindings, waiting for turning the tape, waiting for that read, and getting on, trying to look for that break. So not selling at the lows, because look how many times you'd have been faked out if you'd have sold at the lows. 1, 2. If you sold it here, you have to be very quick to get out before it popped back. You only rewarded 1 out of 4. 1 out of 4 times, and even then you've got to be pretty quick off the mark there to get out of it. But if you're trading pullbacks and looking for the break, you're giving yourself a little bit more room to breathe, a little bit more room to play with, and giving yourself that free trade. Every single one of these trades, 1, 2, 3. I took every single one of these trades, all for different reasons. First pullback here. This was after we pushed up, made a new high. A little bit later on here. Just wanted to make sure we weren't doing the reversal pattern. So this is why I waited for that wick, waited for it to turn, waited for the ticks to come back below 0 and trade it that way. And the final one was just seeing this doing a little couple of tick high, watching it again, then confirming and taking the short there. But for each one of these, I was scaling out as we push lower, and none of these actually, I didn't even hold for the break of 11,000 because I was out of this last one here, and when we broke 11,000 down here, I wasn't in this last trade. I thought 3 times I don't want to take the fourth. But the point is that each one of these trades was a winner, but then the last scale was always stopped out because I didn't get my final target. So I'm taking my 10 or 15, my 20 or whatever on the second and third scales, final target, looking for that push under to here, didn't get it, popped up, stopped out. So I can trade again, each time, even though I'm not getting what I'm after, I'm not getting the premise of the trade, the final target, the trade is not being hit, I'm still making money on the trade. Now compare that to if I was shorting right at the low, looking for the break, right at the low, looking for the break, right at the low, looking for the break. 3 full stop outs you would have got. A lot of difference, that's why I trade breakouts in that manner. And I think it's a good way to trade them. It's a good way to trade them. Position yourself early, and then hold a portion of the position for the break if you believe the break is going to happen, or if that's what you're playing for. Then if it doesn't happen and it's popping up and it's oscillating around, and even if you consider just this little situation here, a lot of chop here, even if you sold this here, you have to sit through a lot of pullbacks and pain and heat before you even get some profits on the trade. So yeah, that's my thoughts on breakouts and little comment to myself, really, cementing the reason why I trade them in the way I do. Another, while I'm talking about comments to myself, cautious on the open. Quite often I'll look at the opening minute to see who's in control, who's tipping their hand first, buyers or sellers. And actually the day before we had a really good drive at the open, and that's normally quite a profitable trade for me, so I'm always looking for that. But I've just got to be careful I'm not looking for something that's not there, and that happened a little bit to me this morning. I was long, short, and I'd made quite a few trades unnecessarily, pretty much scratching a small profit net, but almost class it as a scratch. A few winners, few losers. It was very, very scrappy, very, very scrappy. And in actual fact, the better trade was to jump on when we started to push higher here, which I did. But obviously, I was a bit worn down from doing all that, and I wasn't really prepared. And my entry wasn't as good, and my exit was a little bit too early. And it tends to make the subsequent trades, if you've made a few scrappy ones, not so good. So a little mental note to myself just to wait. Sometimes there is an opportunity, it isn't opportunity in the first couple of minutes, and you have to wait for the hand to be tipped. And really, I suppose, hindsight here, of course, hindsight traders are always the best traders, but hindsight here was probably the pullback here, wasn't it? Pulled back to the break point and then rode up. But this was all very, very choppy and dirty, and we had red, green, lots of wicks and tails. Look at all the wicks and tails out on this. Not my sort of market. I like good, solid bars, seeing buyers or sellers in control. Compare that sort of action there with stuff we got in the afternoon here, and even here actually I took a long as we pulled back here and burst up to the VWAP, which was a nice trade, because this is the sort of thing I like. Nice high tick reading, pullbacks, good volume blasting up. But yeah, this was very, very choppy at the open, very, very choppy. So anyway, that's that covered. Breakouts, that's the note to self about trading at the open. Finally, just want to discuss these trades here. These are trades, guys, that for me, these are my favourite trades at the moment. They are putting a lot of funds into the account, relatively speaking, when you compare them to all the other trades. They really are probably the highest earning trade set up at the moment for me, purely because they work so well. They're easy to read on the tape. If you get them right, the final scale is sometimes 50 something points. Look at my blotter over here now. 53 was my last scale on one of the trades. Actually, that was the buy. That was the buy from here. But the point is, it's a similar setup. And the setup is, as you know, if you've watched my videos, have a flick through, you'll see I've talked about this quite a lot. The drive lower, especially as we break in lows, we're breaking levels like that was the current low. So once that's broken, the volume's there, check. Ticks are nice and low, check. Little pullback, really struggling. Look how long it takes to pull back. Hardly anything. Ticks pulling back to zero. Even if you're not looking at, even if you're not looking at the tape too much and you're using the ticks, I think here was the 0 point of the tick, so you're fine. You're absolutely fine. Scaling out as it goes your way, just in case it pops up. We've got to manage that risk, reduce the risk quickly. Then the trade becomes more relaxed into it, and then you're positioned again for the break. The break of that low, you position nicely. You get it. You can ride it and ride it and ride it. And actually, the final target on that was 11,000 cash, which was down here. I think we missed it by smidgen, but it was close enough. It did push up and then wind and curl back over. But the point of the matter is, these trades are good. They've got to be. You've got to keep your eye on those trades. Well, you don't have to do anything, but I'm keeping my eye on those trades. They're the ones that are working well for me, so I can continue to take those with some good size. And I highlighted this because this I haven't seen this for a while actually. The quarter past 8 trade, I used to call it. Downtrend move, you got the low put in, you get a really shallow counter trend move for about an hour, sometimes half an hour. It sort of takes out some swing highs, like this was the swing high. Looks for all the gets a few bulls excited, then starts to roll. And look at the strength of that roll. Look at how quickly the sellers got on top of that and pushed it lower. Keep an eye out for that sort of behavior, whether you're in an uptrend and it does that and then blasts off that little play there, or whether in, as you saw there, just a downtrend and does that, takes out a few and blasts lower. Even if you're looking at that on a slightly lower time frame as well, if you're looking at little scalp trades, that often happens. Even here, for example, you've got a resistance level there. The high takes it out by a tick. I think it was the high there, 990. Higher the one before, 89. Takes it out by a tick. That sort of play. Got to keep your eye out for those because I can give you a real nice entry on that. Yeah, and there's another example there highlighted. Same sort of thing actually. If you look at the low on the day, I think whatever day this was this Wednesday? Might have been Tuesday. The low of the day was, if I can bring it into the screen, yeah, that was just there. So same sort of thing. Oops, gone off the screen. That was the low of the day there, right there, as I'm highlighting. As we broke it, good volume coming in, good ticks, little pullback, little pop back up. It's always nice. Oops, screen's gone again. Always nice to get a little wick or a tail in your direction that forms just to confirm, and also a nice place to quantify the risk. Rolls over, and if you're on the end of one of those and you're trading multiple contracts, pays to hold. Try and hold for a runner. Really does pay and try and hold for one of those. Look for some extreme targets. Hold numbers on the Dow. Prior day's low, prior day's high, whatever the position of the market you're in, wherever you are. But yeah, if you can hold one of those, then they're the ones that really make up for any scrappy stop outs or scratches earlier on, if that's what's happened to you. So okay, guys, good trading as always. Please manage your risk. Number one thing, stick to your plans, stick to your trading size. Whatever your trading size is, stick to it. Don't deviate from the plan in the heat of the moment. Trade with a professional mindset and take it seriously and wait for your setups. Manage the risk, and things will fall into line. So yeah, good trading, guys. Oh, one final thing. I will be going to the Las Vegas Traders Expo. Just looking around. Not a booth or anything like that. I'm just looking around. So I'll be there, flying in on Thursday, I think, and obviously Friday, and leaving Sunday. So we're there on Friday and Saturday. If anyone's there and wants to meet up for coffee or beer or whatever, then send me an email, mark@thedaytradingroom.com. I shall be there. Okay, guys, good trading. Take care. Back with another video probably over the weekend. Bye bye.